Thanks for joining my channel again. My name is Omar Abumayale, and this is Not-for-Profit Financial Reporting Part 2. Today we're going to be talking about the statements of cash flows and what is required for all not-for-profit organizations, and the relevant information, the cash receipts, cash payments for the operating, investing, and financing activities, the direct and indirect method. Let's go. So today, my name is Omar Abumayale, and this is my YouTube channel, and I'm going to be talking to you guys a little bit of statements of cash flow and in the not-for-profit financial reporting. This is the second part of the not-for-profit section, and we're going to talk a little bit about what we know and how some of the statements of cash flow, what's included in that. What's included is there's three different sections about for not-for-profit statements of cash flow, and that is operating activities, investing activities, and financing activities. And what's included in all that, let's talk a little bit about it. In operating activities, there's receipts and payments. For example, for settlement lawsuits, proceeds for insurance settlements, charitable contributions and disbursements, gross receipts for contribution program income and interest dividend income, unrestricted resources for receipts for long-lived assets and proceeds for sales of financial asset not restricted for long-term purposes. That was all for operating activities. So if we keep on following along, we have something we need to look at, which is we have investing activities and financing activities. And for investing activities, we have receipts and payments. And what are we investing in? Investments in property, plant, and equipment. Property like proceeds from art, or works of art, or proceeds from sales of assets. And then in the financing activity, in the statements of cash flow for not-for-profit, we have things we have financing activities like proceeds from issuing bonds, mortgages, repayments of amounts of borrowed, and contribution restricted for long-lived assets and contribution restricted for donor restricted endowments. So that was all for I just presented to you guys statements of cash flows for not-for-profit reporting. This is the second part. And also I just showed you guys the operating, the investing, and the financing activities. And what after that do we need to know is there's just three classifications of statements of cash flow: operating, financing, and investing. And sometimes there's non-cash transactions, and those must be disclosed. Examples including contributed services. All right, maybe some in the mix in the CPA test, they're going to give you a not-for-profit organization statements of cash flow. What do you need to remember right away is go to your column place. Remember, not-for-profit statements of cash flow, year ended December 31st, year 2, would need operating activities, investing activities, and financing activities. Also may have added other financing activities. All that together, it might show you like a statements of cash flow. It shows you, for example, it starts with the change in net assets. So then it shows you all the adjustments after. And then examples of adjustments: depreciation or increase in accounts receivable, decrease in inventories or prepaid expenses, increase in contribution receivable. And then in the end, after all those adjustments, we use the net cash used by operating activities, and we put it all the way to the right. This is a statements of cash flow. And then if we keep going, we have the statements of investing activities, which shows you proceeds on sale of equipment, for example, or proceeds from sale of investment, or all that together could be, they show you a total net cash. Everything is netted in not-for-profit accounting, and net cash used by investing activities. And then you have the financing activities, which shows you the investments in perpetual endowments, investments in term endowments, investments in land, building, and equipment, investment into annuity agreements. All that together is the operating, changes in operating, changes in investing, and changes in financing and other financing, which could be like payments on notes payable. Okay, all that is added up together and netted together. Net cash used by financing activity comes down to net cash, net decrease in cash. It could show you net decrease or net increase in cash, and from that current year, and then I'll show you the beginning of the year what the cash was, and at the end of the year, and then that's the difference to get to the net decrease or net increase in statements of cash flows for that year, for that period, or whatever. Also, there's no H where you can do a reconciliation of cash, which you also include a restriction of cash adjustment. And that's the last of not-for-profit financial reporting, part 2. I hope this video wasn't too long. Again, like my video, comment, subscribe, help me share this video with the world so I can get my voice across and get better videos. And thank you guys for stopping in. My name was Omar Bumayele. Thanks for stopping to my channel. We'll catch you guys later. GoPro, stop recording.